Good morning, investors, and welcome to your market briefing for Monday, August 18th, 2025. We're seeing a cautious start to the week as the major indices take a well-deserved breather after their recent rally. The S&P 500 and Nasdaq are experiencing mild profit-taking, pulling back slightly from record highs, while the Dow is holding steady. This market-wide pause is coupled with a small rise in the VIX, indicating a slight increase in investor caution. Our feature stock today, Rivian Automotive, is bucking the trend. It's showing signs of a potential bottom with a notable bounce, offering a fascinating contrast between short-term technical strength and its long-term fundamental challenges. We'll break down the indices, volatility, and then dive deep into Rivian's chart and the news shaping its future. First up, the S&P 500. The index closed down 0.29%, consolidating just below its recent all-time high. This type of price action is healthy after a sustained run-up. While the RSI remains strong at 65, the MACD indicator is showing flattening momentum, suggesting the bullish drive is losing some steam. This looks like a standard pause for now. We're watching the 6,400 level as the first line of support should this profit-taking extend further. Over to the Dow Jones Industrial Average, which is today's strength story, closing nearly flat with a gain of 0.08%. This resilience from the 30 blue-chip stocks indicates that investor confidence in established, value-driven names remains firm. Key indicators like the RSI at 60 and a rising MACD are still solidly in bullish territory, showing no immediate signs of a reversal. The Dow's stability is currently providing a floor for the market amid the slight tech pullback. The tech-heavy Nasdaq closed down 0.4%, also seeing a minor pullback as growth stocks pause to digest their recent impressive gains. The index is still trading comfortably within its bullish uptrend channel, near the upper Bollinger Band. However, like the S&P 500, the MACD histogram reveals that upward momentum is fading, which warrants attention. The key support level to watch here is near the middle Bollinger Band, around the 21,200 mark. Let's check in on the VIX, the market's fear gauge. It's up slightly today, closing at 15.09. This isn't a signal of panic, but it does show that some traders are starting to hedge their bets against a potential market dip. This small green candle after a prolonged downtrend suggests investor complacency might be fading slightly. If the VIX continues to climb above its 20-day moving average, we could expect broader market weakness.
Now for our focus stock, Rivian, which presents a far more optimistic technical picture today. The stock closed up over 1.49%, forming a solid green candle as it bounced off recent lows. This move is supported by multiple indicators signaling a potential bottom. The stochastic indicator has made a bullish crossover from oversold territory, and the RSI is climbing back towards the 50 midline. While the MACD is still negative, its bearish momentum is clearly diminishing. The immediate hurdle for Rivian is the middle Bollinger Band, currently around 12.77. A decisive close above this level could confirm a short-term trend reversal. While today's bounce for Rivian is a positive technical signal, it's crucial to consider the long-term fundamental picture, as detailed in a recent Motley Fool analysis. The article rightly questions where Rivian will be in 5 years, stressing that its entire future hinges on the successful, large-scale production of its more affordable R2 models. Today's pop is a technical reaction to oversold conditions, but the fundamental story hasn't changed. Rivian still faces immense challenges, including significant cash burn and fierce competition. Therefore, the market's cautious outlook on Rivian's long-term prospects remains, and today's move should be viewed as a short-term relief rally until the company demonstrates clear progress on its path to profitability. Thank you so much for joining me today. I look forward to sharing more market insights with you in our next analysis.